This is Agriculture Today, and it's good to have you listening in once more as our Friday edition starts out on the grain markets and on the heels of important numbers on prospective plantings and grain stocks released yesterday morning by the USDA. To pour over those and their market significance now, Dan O'Brien, grain market economist, K-State Research and Extension. Dan, the corn and the soybean prospective plantings numbers were, of course, of the biggest interest, greatest interest going into this report. And actually, the acreage numbers flip-flopped from pre-report expectations.
Yeah, there's a projection now in the United States that we'll plant more soybean acres than corn, and that's not always the case. Record high soybean numbers projected for about 91 million acres. And that's over the average guess coming into this report of about 88.8 million. So, plus about 2.2 million over the average guess. The corn number of 89.5 was about 2.5 million acres lower than the average guess coming into this of about 92. I saw from the USDA numbers a combined acreage of corn and soybeans, looking at how the combination of the two came out relative to the combined averages, and it was dead in the middle. So we're trading corn for soybean acres, and you and I talked before we came on air about what the reason is, and I think it's pretty obvious that high fertilizer prices and or just the availability of fertilizer in some areas has a lot to do with the lack of the cutbacks that we've seen in corn acres. Still, we're planting almost 90 million acres of corn, and this is to come in the ground yet, and we'll see what happens when planters start to roll for corn. We may end up, if we have good planting weather and prices like we're seeing right now in terms of the response to this report, if we see strong corn prices, perhaps that will turn some people to plant even more corn acres than this survey, which was taken to represent conditions about March the 1st, would indicate. So we shall see. But the big issue coming out of this report is that, gracious, on the one hand, we've got strong soybean acreage, strong soybean acreage, record high, and somewhat lower corn acres than had been expected, and if anything, it just heightens the pressure on corn production prospects in the United States in coming months, that we get a good planting weather, that we have adequate moisture throughout the Corn Belt, east, west, central, north, south, and end up and have good yields. Or if you have a lower planted acreage base and any problems with getting that crop harvested and would struggle on the yields, then do you get a 14.5 or 14 billion bushel crop instead of a 15, or heaven forbid, in a situation like this, in a year like this in the markets, something worse than that. So it really does set us up for a lot of volatility coming through the spring. And we should say that yesterday that the markets in their response ended up, and I thought it was interesting to see that the upfront months, the old crop months of May and July, were up about 10 cents for May, 13 cents for July, both of those over $7. Again, May at 7.48 for the close, and July at 7.33. But as you got further out to the Dees contract, it closed at 6.83 not far at all from $7, and up 27 cents. So in fact, that was I guess the highest gain for the day amongst the corn futures contracts. So square bullseye of focus now on new crop Dees corn, and we'll see where that goes. And November soybeans, on the other hand, went the other direction. A pretty strong fall off of again 49.5 cents, 49.75 cents down to 14.20. Still a tremendous price, 14.20 and a half on yesterday's close. And again, in that complex, we had a lot of money lost. But again, the November contract lost the most by a penny or so. Again, January 23 was down 48 cents, March 23 down 43. More along the lines of old crop contracts, July or old crop contracts, closer to the lead contract. May down 45, July down 44 and a half, August down 41. So all along that soybean futures complex, a lot of losses, and you combine that with some encouraging reports over what's left coming out of South America, some rainfall they've received, and you've got some factors that are mitigating prices a bit lower on the soybean side. I should also say that these changes that happened for corn and for soybeans, yes, they're 20, 25, 30 cent changes on corn, 40, 50 cent changes on soybeans, but still for both of those commodities, you're still within the trading range that was established with the big run up on March 7th and the big fall off on March the 8th. And so we kind of set the high and low range for corn and soybeans within that. And for corn, that range is basically from about 718, 717 on the low side up to about 780 thereabouts. And here closed yesterday at 748 and a half, just right in the middle of it. And we've been trading in that range for a while. And for soybeans, again, on the May contract is when we closed at 1618 yesterday. The big March 7th, March 8th range on the high side on the 7th, closed up to about 1760 on the low side, down to 1575. If we remember just a few weeks ago, those gyrations. Well, here we closed yesterday at 1618. We're within that range, and haven't challenged the bottom side of that quite yet. The one major commodity in Kansas that we're watching closely that has been trending down has been wheat, hard red winter wheat in Chicago, traded in Chicago now, the original KC contract, but the Kansas hard red winter, and that had traded up on the March 7th run up to about 13. It had closed down to about 1040 thereabouts, and here now in the last year or so we've broken below that to about 1029, 1030, well, 1029 3/4 for a close. I think now if we're looking at kind of a bottom side of trade, we had gotten down 2-3 days ago down to $10, and that seems to be what the market is sort of respecting now as a low end side. So just interesting to look at.
Some odds and ends here, Dan, if we might. Grain sorghum acreage, of course, a crop important to Kansas agriculture, notably lower, and the numbers in Kansas and Texas in particular were cited as falling off this year, according to prospective plantings. Is that once again a function of high input costs?
Well, yes. We should put that in context. When we look at corn acres in Kansas, corn acres were down 5%. Grain sorghum acres, I don't have an exact grain sorghum number in this report, although I could pull it up out of the printed report, but total of 15%. If you're going to lose 15% of grain sorghum acres in the United States, a big chunk of that's going to come out of the two biggest states by far, Texas and Kansas. So we're lower. The fertilizer issues, no doubt, affected all the feed grains. Seems like grain sorghum a little bit more. I think there's been probably, as farmers were looking through the winter, they were looking at times lagging grain sorghum export paces. Although the last 3 weeks we've had 10 million, and here this last week 13 million bushels a week actually shipped. So that pace is now picking up pretty strong. But they did this survey was taken March 1st, on the front end of all that run up. So anyway, we've had very good grain sorghum prices, but at least as farmers were making their plans as of March 1, they were indicating sharply lower grain sorghum acres. Again, we'll see where all this comes out. Like I say, it's noteworthy to me that the last 3 weeks we've been 10, now 13 million bushels a week, and that's pretty strong for grain sorghum. And we'll see if that changes farmers' perceptions and expectations, and perhaps affects their planted acreage as we move on into the coming month or so.
And not to overlook the quarterly grain stocks report, also released in tandem with the prospective plantings report. Wheat stocks are still low, and that has to be providing that firm underpinning to the wheat market.
Yes, when you look at overall U.S. wheat stocks and compare that graphic to what happened for corn and for soybeans, corn and soybeans sideways, a little bit higher. Holding steady, no big surprises, but definitely a downtrend in the wheat stocks area. It does, I guess, this whole set of reports, particularly the stocks numbers, is kind of setting up what changes the USDA might bring in the coming WASDE report that'll be released on next Friday, April the 8th. So I guess I'm really curious to see whether the lower stocks numbers will appreciably change the U.S. wheat balance sheet. And this has been an international focus that's driven prices higher for wheat all along. It's been the fear of what can happen in these other countries. I would note that we're starting to see major worries overseas in some of these countries. And the one that you probably wonder about most, Egypt, is now coming out in the last 2 or 3 days talking about domestic unrest because of lack of availability of food. Well, that's coming right head on into this very Black Sea wheat lack of availability issues. So we've had calls from media outlets in the last week wondering, have we overestimated the impact on the world wheat market from what's occurred in Ukraine and Russia? And my contention is that no, we haven't. We're just we haven't gotten to the place yet where we were really panicked about the demand and meeting the demand side. So we ran up and we've sort of receded. At current time, we've had some moisture in parts of the hard red winter wheat belt, but I just think there's a lot of uncertainty and a lot of panicky demand and probably protectionism that's all out in front of us yet. That will have to be dealt with. So I don't want to. I guess I'm not a pessimist in terms of where wheat prices could go still in spite of the downtrend we've seen here of late.
Well, volatility remains the watchword in the markets. With the prospective plantings report now behind us, we'll see what triggers these markets next. It's a day-to-day thing, and Dan, of course, provides updated notes on the grain trades and what's influencing those on the agmanager.info website. Each week, have a look. agmanager.info. Dan, thank you for your time.
Thanks, Eric. Take care.
Grain market economist Dan O'Brien, K-State Research and Extension on the grain markets. And we'll return on Agriculture Today.